Ladies and gentlemen, Tesla's earnings are out and we have the numbers that you need to know. Tesla stock is currently trading lower about 2%, along the lines of what I expected for that initial report. Up or down 2 or 3%, it's really not a big deal either way. You also have Google's earnings that are now out, and Google's up about 2%. They were down as much as 5% at one point, and well, that's just going to be volatile for a period of time, just like Tesla. And Tesla stock is all over the place, trying to now go green. Tesla's EPS on a non-GAAP basis came in at 52 cents versus 62 cents as were the estimates. That's quite a bit lower than what Wall Street was expecting. EPS on a GAAP basis, general accepting accounting practices, came in at 42 cents. Revenue came in at 25.5 billion, beating easily the estimate of 24.38 billion, and total GAAP gross margin came in at 18%. Wall Street was expecting the low 17% range, around 17.3% or so. So gross margins did come in good. So we got better than expected gross margins, but worse than expected EPS. They're kind of offsetting each other here. As I explained in prior videos, don't expect much out of Tesla's numbers in terms of actually moving Tesla's stock. Tesla's stock moves on the conference call based on what Elon and the executive team says. But we do have the quarterly update deck to go through. Profitability, 1.6 billion on a GAAP operating income for Q2 after restructuring and other charges cost Tesla about $600 million. So it would have looked a little bit better without those costs. 1.5 billion GAAP net income in Q2 and 1.8 billion non-GAAP net income in Q2. Operating cash flow came in at 3.6 billion for Q2. Free cash flow came in at 1.3 billion in Q2. AI infrastructure capex was 0.6 billion in Q2, and the free cash flow numbers were expected to come in over $2 billion, right at about $2 billion. So that was a bit of a miss as well. If you include that AI infrastructure cost, then Tesla's free cash flow would have came in basically in line with expectations. This is impressive though. Take a look at this. $3.9 billion increase to Tesla's cash and investments in Q2, now totaling $30.7 billion. Tesla is slowly building up to be this behemoth of cash ready to deploy in their own investments or potentially in other ventures. For operations, you had a record energy storage deployment of 9.4 gigawatt hours in Q2, and Optimus began performing tasks autonomously in one of the Tesla factories. At the same time, the Cybertruck became the best-selling EV pickup in the US in Q2. Tesla goes on to say that they recognize record regulatory credit revenues in Q2 as other OEMs are still behind on meeting emissions requirements. Global EV penetration returned to growth in Q2 and taking share from ICE vehicles. We believe that a pure EV is the optimal vehicle design and will ultimately win over customers as the myths on range, charging, and service are debunked. Progress continued on our AI initiatives in Q2. We reduced the price of FSD supervised in North America and launched free trials to everyone with the necessary hardware. These programs have demonstrated success and are laying the foundation for more meaningful FSD monetization. That's an interesting part. We expect to see an increase in FSD attach rates for our fleet as the capability improves and we increase awareness of the convenience and safety it offers users. Overall, our focus remains on company-wide cost reductions, including reducing COGS per vehicle, growing our traditional hardware business, and accelerating development of our AI-enabled products and services. Though timing of robotaxi deployment depends on technological advancements and regulatory approval, we are working vigorously on this opportunity given the outsized potential value. Concurrently, we are managing our product portfolio with a long-term orientation and focusing on growing sales, maximizing our installed base, and generating significant cash flow to invest in future growth. Tesla goes on to say, as far as volume, our company is currently between two major growth waves. The first one began with the global expansion of the Model 3 and the Model Y platform, and we believe the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next generation vehicle platform. In 2024, our vehicle volume growth rate may be notably slightly lower than the growth rate achieved in 2023 as our teams work on the launch of the next generation vehicle and other products. In 2024, the growth rates of energy storage deployments and revenue in our energy generation and storage business should outpace the automotive business. On profit, Tesla goes on to say, while we continue to execute on innovations to reduce the cost of manufacturing and operations, over time we expect our hardware-related profits to be accompanied by an acceleration of AI software and fleet-based profits. As far as products, plans for new vehicles, including more affordable models, remain on track for the start of production in the first half of 2025. These vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms and will be able to be produced on the same manufacturing lines as our current vehicle lineup. This approach will result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. This should help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines. Our purpose-built robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy. Tesla goes on to give us some pictures of Optimus, Model S and Model X, some battery packs, but nothing new as far as new information about the next gen vehicles, timing for that, the robotaxi event, or anything. So the big move for Tesla will actually come on the earnings call, and we'll cover that at 8 p.m. Eastern Standard Time. Hopefully I can get this kid down to sleep. Take a nap or two. Besides just the new information that we got today for Tesla earnings, we did have some news that came out before Tesla earnings that I think you also need to know. Elon Musk just said this about the latest version of FSD. Elon Musk says we are focusing on just Model Y with hardware 4 for the initial release. Make sure that works well, then broaden. This has the 5x increase in parameters. Hardware 3 would run the same parameter count, but requires extra work to optimize the code. So we are talking about some big improvements here to full self-driving. Earlier this morning, it was reported that Tesla China sees 10,500 new vehicle registrations in Q3's third week. This is much better than the same week of last year when you only had 7,700 vehicles that were registered. And then comparing this number to 2022, it's mind-blowing. You only had 3,034 registrations in this same week of 2022. So that's up over 300% in just a 2-year period. Zach on X says the first FSD V12.5 drive went really well with Holmar's catalog. If I could describe it in one word, it would be smooth. Very confident, especially around highway corners, even more than 12.4.3. Excited for my hardware 3 Model 3 to get it. One weird braking, getting out of a carpool lane, and hesitation at one corner, but 0 disengagements. And AI Driver on X says FSD 12.5 first drive impressions, again reiterating by far the smoothest version of FSD ever. He says the way it approaches stop traffic, takes off, slows down for turns, etc. has never felt better. It was also reported early this morning that Tesla China is extending their 0 interest rate promotion for the Model 3 and the Model Y vehicles once again through the end of August. They were previously until the end of July. They were extended by 1 month. That's simply just because these low interest rate promotions are driving so much demand for Tesla. Yes, it costs Tesla money to buy down the interest rate, of course, but on net, this is selling more vehicles, and that's good for Tesla. General Motors said today that it has indefinitely suspended production of its self-driving Cruise Origin robotaxi, its self-driving vehicle without a steering wheel. These are currently the most upvoted questions from retail investors for Tesla's management team to answer, and Tesla usually answers the first 3 of them. So first up, number 1 is, when exactly is the robotaxi event? If not on August 8th, we're going to get this one answered definitely today here in after hours at some point during the call. Number 2 is, when do you expect the first robotaxi ride? I don't think this one is going to be answered with any kind of certainty. This is a question that will likely get answered on the robotaxi event itself. And number 3 is, what is the current status of 4680 battery cell production, and how is the ramp up progressing? Number 4th most upvoted question, barely not ahead of number 3, is, what is the updated timeline for Giga Mexico, and what will be the primary vehicles produced initially? I think this could be a big one if Tesla decides to answer it. And number 5, will Tesla Energy continue to see rapid growth in gigawatt hours deployed going forward? And this is something I think a lot of institutional investors would like some kind of guidance on. Just considering how much Tesla's energy generation and storage beat estimates in this last quarter. Tesla's short interest of free float remains at 3.79%. You currently have $26.43 billion currently sold short in Tesla, and that equals 105.1 million shares that are currently sold short. As far as option activity today in Tesla stock, you only had 2 interesting and unusual options trades from big money, totaling $345,000 with a positive order value of 100%. But I do see some pretty interesting trades here. This one is a December 20th $300 call worth $719,000. That's a very short term, very bullish trade on Tesla. The percent of stocks currently trading above their 50-day moving average is up about 0.5% today to 69%. So continuing to see some stocks advancing. CNN's Fear and Greed Index today is at 56, which is barely in greed territory. Yesterday, you were neutral at 55. Market momentum, extreme greed. Stock price strength is neutral. Stock price breadth is fear. Put and call options at greed. Market volatility is fear. Safe haven demand is in fear. And junk bond demand is extreme greed. Sentiment today for Tesla is bullish at 69, better than yesterday's number of 55, which was also bullish, but people are feeling pretty good about Tesla earnings overall. Message volume at 51 today, and yesterday it was low at 45, and the participation ratio today is high at 55. So lots of people talking about Tesla stock. Google Trends data today continues to look like it's moving in the right direction. The Cybertruck going from 63 to 68, the Model Y going from 25 to 28, the Model 3 staying at 23, the Model S at 10, that's unchanged, and the Model X is going from 8 to 9. Google Trends data for full self-driving is at 20 today, which is higher than where it was just last week when you came in at 18. So continuing to trend at very strong levels. Tesla continues to run about 4,000 different ads with Google, and Tesla's global inventory numbers for the Model Y are coming in at about 5,900, the Model 3 at about 4,800, the Model X at 3,200, and the Model S at about 2,800. We also did get some economic data today, including existing home sales that came in at 3.89 million. We were expecting 4.25 million, so that was a big miss. Existing home sales month over month came in at negative 5.4%. We were expecting positive 3%, so that's a very big miss as well. Richmond Fed Manufacturing Index came in at negative 17, expecting negative 8. Richmond Fed manufacturing shipments came in at negative 21, expecting negative 7. So big misses there for manufacturing. But Richmond Fed services index came in at positive 5. You were expecting negative 9. So manufacturing very weak, much weaker than we thought. Home sales data very weak as well. Weaker than we thought. But services data came in a little bit better than we thought it was going to. So let me know what you think about all of this information down below in the comment section. We will be doing a full breakdown and analysis of what you need to know for the earnings call coming out at 8 p.m. Eastern Standard Time tonight. Trust me, you will not want to miss that video. Until then, ladies and gentlemen, if you guys want to come trade with us, check out that link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.